So you've heard of contribution margin, right? This is the new thing du jour, and today I want to really unpack this idea because I think the idea is the contribution margin will let you know how much more you could spend or what it would look like if you doubled your spend, because that's how we're going to grow the business. The problem is, much like walking into your office and saying, "I declare bankruptcy."
I declare bankruptcy!
Or like at an old folks home pointing to somebody and being like, "I unfriend you."
I unfriend you.
That's not how it works. That's not how any of this works.
That's not how this works. That's not how any of this works. If you want to scale a business, it's all about future cash flow. You cannot survive on vanity metrics alone. Let's dive into this because this is an idea, and we're gonna break it down today. Let's attack this idea and actually help people make real money instead of taking what vanity metrics ad agencies need to push so that they don't get fired. Let's go! Don't forget to like and subscribe if you like these videos. Welcome to Digital Marketing and Fiverr. We talk about all the things you probably should have seen on the internet this week. Now, what I want to feature is this email that I got. I don't often look at a lot of my emails. This one just happened to pop up because it said ROAS and contribution margin, which I thought was really clever because contribution margin is a fancy version of MER, which is a fancy version of ROAS, which is just a lie people tell you. Now there are a couple of things that I want to point out. First, there are use cases for this. If your business does not have future transactions, you are a salesperson with a product, not a business that acquires customers, then this is perfect for you. If you have any other marketing channels than just Facebook, this breaks down. If you have any customers that are able to talk to other customers in the world and help drive sales, this breaks down. And if you want to begin to understand what things look like in an omni-channel fashion by focusing on incremental lift so that you can begin to truly leverage your revenue floor to pay for your growth, this breaks down. I want to be very specific here. What we are talking about is breaking down the idea of contribution margin, which again is just a fancy version of MER, which again is a fancy version of ROAS. Brought to you by the same folks that said delayed attribution was a thing, and the same folks that are still pushing cost caps. And we have to get down to something very clear. At the core, what's being pushed by all of these ideas, from delayed attribution 3 years ago to cost caps now and contribution margin, is how can we make sure that on day one, what we're doing looks good? This is not how do we ensure more volume of profit in the future. This is not how do we leverage the business model to raise the opportunity for all channels involved to make the bank account look as big as it can. This is a very specific objective of how do I make sure that my day one looks good? Because to be fair, the business model of running ads for other people often comes at the inflection point of early returns on your investment. Now, there are two ways to overcome this. Number one is having a client that understands LTV and purchase frequency, and people don't say really stupid things like,
"I'm not gonna pay to acquire a customer twice."
You don't pay to acquire customers twice. You pay to acquire transactions. If somebody makes a sale with you, that does not mean they are your customer. Making a sale does not imply any bit of loyalty. That's just not the way this works.
That's not how it works. That's not how any of this works.
Now, if you look at this email, and I get it, we're focusing on things like new customer acquisition and AMER and a lot of other things. The problem is, as soon as you begin to take into account, well, MER is based on all the revenue, right? Well, how many of that is people making a second purchase? How many people are making their third purchase? Is this month different than last month with the makeup of those second and third purchases? What's the profit margin on each one of these transactions? Because maybe your revenue is higher, but you did more discounting or you did more full price. We're not accounting for any of these extraordinarily important financial elements when we're ultimately deciding the efficacy of our marketing. NCPA, also, that metric says, well, once you get a customer, they're yours. Look, the vast majority of your customers never buy from you again. Believe me. If you didn't rely on pissing people off because you think they give a damn about your emails and text messages as the way to get a second transaction from somebody that isn't gonna do it otherwise is the way to go, you're going to struggle with your ability to secure cash flow to grow your business. If you ask anybody operating an 8-figure business, what they will tell you is something simple. Cash flow is everything. If you ever look at any episode of Dragon's Den or Shark Tank, something you'll never hear anybody ever ask, what's your contribution margin? Or what's your ROAS? None of them ever care about that. Now they might say how much does it cost to acquire a customer? And really what that means is how much does it cost to acquire a transaction? And they might say, well, how much does it cost to produce a product? Okay. Now if we look at the contribution margin, neither of those things are taken into account. Do you care if you have to pay a little bit extra to get somebody to come back and buy a second time who wouldn't have been there otherwise? Do you care that spending a little bit of money on folks that have bought from you before actually brings down your average cost per transaction, both on and off the platform, because you get a higher volume of transactions, so the money you invest, which basically means you get a higher volume of profit? And the answer is you might not. And this is what it really comes down to. What is your definition of success? Now, if your definition of success is profit margin per dollar spent, then this is brilliant. And this is incredibly valuable, especially if you're not taking into account the effects of omni-channel marketing, so you can take as much credit for every other marketing channel's efforts. The problem is that's just not the way it works. That's not how any of this works. Odds are you have organic efforts. Odds are you do have some email or SMS. Odds are you probably are, either paying influencers or just running search campaigns on Google, and by golly, just hit the button so you're getting it into Bing. And if you ultimately pay attention and say, well, what makes an 8-figure business and a 9-figure business work? There's a lot of hacks, but they don't rely on selling to a customer one time and profiting on that sale to bankroll the whole business. I don't know a single 8-figure business that does that. I know a lot of struggling 7-figure businesses that hire agencies to solve that problem better. The problem is you run into this misalignment of objectives. Because if I'm your agency and I'm trying to most effectively get you the highest profit per dollar spent on day one, what I'm not doing is getting you the most amount of profit. And that's a dramatic difference. Would you rather get $5 for every dollar you spent if you spend $100? Or do you want to get $2 for every dollar you spent at $10,000? And really it comes down to this. If you can spend 1% more tomorrow, every day of the year, because you know that the cycle of purchases and the cash flow that's coming in and the operating capital that comes in above the cost to get those transactions, the cost to make those goods against the LTV of that customer allows for the margin of 1% more. That's 37 times more by the end of the year. Now, I'm not saying you're gonna 37x your business. Clearly, there are issues in the way. But I know a lot of people that say, look,
this stuff works. I've doubled my budgets. I've grown my business from $500,000 to 1, from 2 to 4.
My point is, that definition of success is far less than you deserve. And by the way, this takes phenomenally more work than doing one thing well. And it ultimately comes down to this simple question. Do you want to show a higher profit per dollar spent, or do you want a higher volume of profit? And if you're looking for higher margin of profit per dollar spent, this is the path. Especially, again, if you can take credit for everybody else's work. Or do you want to help people make more money? Do you want to help create more jobs? Do you want to produce more stability and joy and just overall opportunity while also working less and making life a lot easier on your finance department and the warehouse and the inventory, and reducing your operating costs when it comes to how much you're paying an agency to do the work for you and how much you're paying creators to make content for you. Because if you focus on a single campaign, pushing a hero product where you know the PSM, all of this stuff becomes completely useless. And that allows you to say, yes, I can spend more often, in a way that's projectable and fractional in its growth rate. I tell people all the time, 5% a month is 3x a year. 5% 3 times a week is 2x a month. If you're stuck at $2,000 a day right now, in 90 days, you can go from 2 to 4, and from 4 to 8, and 8 to 5 figures. It's completely possible. But if you're still relying on silly things like contribution margin, the odds of you getting there are basically zero. Unless your business is so good that you would have gotten there anyway. And if that's the case, how many tens of thousands of dollars a month do you want to pay somebody to do the work for you if you were going to do it anyway? And on that note, we're going to call it a day. So thank you very much. Don't forget to hit like and subscribe. I want, again, to say what I'm trying to do here more than anything is lay out my opinions around an idea. And the idea is contribution margin is anything more than MER, which is anything more than ROAS, which is anything more than complete, ludicrous, in my opinion, disingenuous, opportunistic reporting. And if your focus is to scale your business, and ultimately to scale the volume of profit you make, well, this is the antithesis of your success. And with that, I'll let you all go. Till next time, I'll see you on the internet.